Alright, so if you're just joining us, I got short on this setup right here. You can see that the entry is at 50.49. We've got some targets. You could trade to target 1, target 2, target 3. You could even set a target in between target 1 and target 2, which is a good idea for a single position. We're trading to target 1 and target 2, looking for that first opportunity to push the stop lower. You'll also see that we're in a chop zone with all the red dots down here on our chop indicator. We could take a trade with the direction of the 50 EMA, which you can see is pushing lower. We are pushing on the low of the day here, so if this low holds, obviously this trade won't work. But what I like about these kind of trades is that when a new low is made, it could often be a nice strong move, especially coming out of chop, and that's what we're hoping for in this trade. I did start this trade a little early for the sake of this video. If we were waiting for the trade plan that we typically use is to begin at 8:50. You can see that the setup was at 8:44, a little early, and it did stab down at 8:47. But now we're in our start time, and if you're waiting for the start time, if this pushes lower, you would just enter the trade and maybe make a little adjustment just to get below the low. You can see a new setup right there as well. We're going to stick with the setup that we have. If you were waiting to trade, you would take the new setup. It's the same entry, slightly different targets, 35 and 27. We're going to 30 and 19. And the chop indicator definitely doing a good job of showing us that we're entering this trade in a choppy zone. But remember, those breakouts tend to occur in the direction of that 50 EMA. Not always. Nothing works 100% of the time, but the odds are in our favor. And if it breaks through, it'll be a nice trade. We'll see if it plays out like that. It's just another trade. Got a lot of confidence in the counterpunch. Handles chop pretty well. This is where our stop is. And looking like we're trying to push through. You can see our targets down here. And we did make a new low of the day. We pushed all the way down to 36. Anyone joining in, taking that new trade, missed the first target by just one tick. That first target on the new setup is at 35. We're holding out for the bigger one. Choppy markets don't always like to go in the same direction all at once. They backfill a lot. We'll see. It looks like we might be entering.
Order filled.
Oh, look at that. We just moved down and hit our first target. So we're going to move our stop down. We'll lock in a tick, and we're going to work around the jump line. The jump line's at 47. We already have our stop at 48. Locking in one tick. We're going to see if we can get down to 19. And you can see how the smaller trade has already hit its targets, and that one you'd be done with. And here we go. We're starting to make a nice move here. I don't want it to come all the way back. This is so typical of counterpunch trading. You can see the jump line's already beginning to move lower. We could be trailing also. You could trail a position. We're just doing a two target approach on this example. 47 is where our stop now moves. We'll go 2 ticks above our jump line. We borrowed the jump line from Trend Jumper. It's such a great momentum indicator. So we're using it as a trailing tool and a confirming indicator. It confirms momentum for us with counterpunch. We want to make sure the odds are in our favor when we choose which direction we're going to go with the trade. This looks like it could come up. Be nice to be able to get this target here. Now you could trade for profit. Remember I said if you do a single position, you could set a target between target 1 and target 2. And looks like you would have hit it as a first target right there. Very flexible strategy. It's kind of hard to break this strategy. And now we're missing our target by just
Order
3 ticks.
filled.
And there it is. Full target winner. Now if we were trailing, we would just be following the jump line all the way down. It's very simple. You can see it's starting to push lower, but you want to wait for each bar to close. There it is. So now the jump line would move. Your stop would move down here. So I'm just pulling the red line down to show you where the stop would move to if you were trailing the jump line. You could also have a target at target 3. That's another good way to go. All the targets have very high winning percentages, and you can see target 3 just almost being hit. And let's see, what is target 3? 50.09. Got as low as 50.10. So missing target 3 by 1 tick. I mean, if that were me trading target 3, I'd probably be pushing the stop super low or just hitting the market out button. I wouldn't fight over 1 extra tick on that third target. Another method is when you miss a target by 1 tick, you move the stop to the other target above it as a fail-safe. So for sure you would get target 2, but you're holding out trying to get target 3. So lots of ways to go, and every way is a good way. It's a matter of personal style. So trailing with the jump line at 22, I would have my stop above the key level of 25. So I'd keep my stop right at 26 if I was trailing. You see, so you're either marketing out when you miss the third target by 1 tick, just hitting the market out and don't fight over that target. You can move your stop down and take it at target 2, or if you're trailing, you trail the jump line and hope that we get another push lower. And the jump line moved down to 20, so really this stop should have moved down to 22, and then you would have stopped out and that trade would be over. That's a classic counterpunch trade. So what happened on this trade? Every time the price came up and hit the 50 EMA, Counterpunch identified it as a small exhaustion point. These are the kind of exhaustions that lead to trend continuations. Even though there was some consolidation coming in, we knew the bias was down. We could see that the 50 EMA is down. We're below the 50 EMA. All our setups are below the jump line. And you can see the signal lines down here on the histogram also moving lower. All in all, a really nice trade. Can you reverse to long here? You got an exhaustion point right here. Counterpunch is showing us now a long trade. Yeah, I mean, this is a classic counterpunch trade. Another one. This isn't a trend continuation. This is a reversal trade. You're going against the prevailing trend, but you might have enough in here to get to your first target, maybe even your second. Of course, a lot just depends on your trade plan. And there you go, hitting that first target. So that first target went from 27 to 40, so that's 13 cents. That's $130. We would lock in 1 tick, like so, you see. And now the second position, whether you're going for target 2 or target 3 or trailing, you have a risk-free trade. You'd be moving your stop up, lock in 1 tick, and then whatever happens, it's all gravy at this point. This is a primary trade. The calculator would be tracking this trade. I could turn on the track stops. And you can see the stop did move up, did lock in 1 tick. Stops at 28, it came down to 29. So look how perfect that is. We got in at 27, locked in 1 tick. If we were taking this trade at 28 and the price came down as low as 29, it did not yet stop out. So it very well could. This is a winning trade. If you're going to target 1, that's usually a pretty accurate target. And there, now it would have stopped out right there.